Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a in-depth look at some of the changing and variable dynamics that exist in our financial markets and our economy, not just ours and throughout the world. And I have with me my co-host, Chris Agelastos, to help us do this and walk us through it today. How are you, Chris?
I'm doing well, thank you.
All right. Well, good to hear. Let's get right into it. We're going to talk about from Watcher.guru, BRICS nations and why BRICS nations keep buying gold as prices hit $4,850 an ounce. Okay. Now, here's the deal. BRICS nations, yes, are buying gold as gold sits at this 4850 number and fluctuates here, there, wherever. However, they also were buying gold when it was $2,000 an ounce, probably
Oh,
less. And then 2,500, 3,000, all the way up to 5,000. And my point being is that BRICS nations and central banks, for that matter, largely have not stopped. They have not taken their foot off the gas pedal as far as buying gold for the last several years now. In fact, the central banks just set a all new monthly record. I think it was last month. And we've talked about this on the podcast. I've talked about it in other interviews I've done, Chris. Where like, here's the thing people need to understand: they see what's coming. They see trouble on the horizon. So the price is becoming less significant. Is not nearly as significant, let's say, as ownership of the asset itself, and they recognize that.
yeah.
And what's really kind of key and interesting when we saw gold, excuse me, hit that $5,000 mark and it pulled back really largely when the war started.
Mhm.
The one of the things that I've covered in numerous interviews is that understand the physical buyers of gold, not only did they not stop, they again put the pedal to the metal. They started buying more and more and more.
Yep.
And what we saw in terms of gold prices pulling back, that was really the gold futures contracts, excuse me, from the COMEX and other exchanges, where these were just investors who are invested in all the markets, who were just trying to make a play on the markets. And what they were doing with gold prices is vastly different than what we see, again, these BRICS nations and central banks doing. So tell us more about that, Chris.
Yeah, these central banks, I mean, really, they've been, I think since about 2017, 2018 now, most of these BRIC central banks have approximately doubled their holdings. So, they were buying well before it went up. Like you said, they're even increasing their buying now that the prices are higher. And I think what people need to realize is part of the reason prices are higher is because of all this consistent buying by the central banks. The average mom and pop investors, people that we talk to, you and I, if we want to add a little bit of gold, to our portfolios, maybe pick up some coins here and there, we're not drastically shifting the overall demand on the markets. It's really this de-dollarization trend, not just with BRICS nations, with a lot of countries in the world, but certainly with BRICS focusing on creating their own currency, backing their currency with gold. I believe their goal, excuse me, is approximately 50% of their currency they want to have backed by physical gold when they launch it, which should be sometime probably in the next couple of years, if not sooner. And so they're also one of the big producers of gold. BRICS nations alone produce about 50% of the world's supply. So a lot of this they're buying from themselves as they invest in mining and buy it from mining operations within their countries. So that's not going to change just because the price is going up. In fact, their continued buying is what is set to continue to push the price higher, with a lot of analysts talking, $8,000 to $10,000 per ounce for gold in the next couple of years.
Sure, sure, and that's the more after this little rebound that we've seen, more and more people are starting to come out and say, "Whoa." They didn't expect it to bounce back to this 4,800 level as quickly as it did.
Hmm.
And that's opened up the door for some very aggressive forecasts in terms of what it may do in the, not even that in the long term, maybe in the next 6 months to a year.
Yeah.
Now, moving ahead to our next article here, and this kind of, there's two aspects of this I wanted to talk about. Silver deficit surges 15%, is a price spike next, is the title of it, again from Watcher.guru. And in this article, it actually kind of speaks to what I mentioned a moment ago about how the paper representation of gold, and in this case silver, is a completely different marketplace than when you get into the physical. There's a relationship of sorts, but not a direct relationship. It's not as, and that's the problem. What this article is
Yeah.
getting into is the fact that the what the people who are buying silver on paper, the deficit in terms of how much actual physical metal is out there versus how much paper silver has been bought and sold, is a gap that just continues to get bigger and bigger and bigger. And the question has been for quite some time now. And we've seen this situation, or this potential problem, kind of somewhat rear its head a few times in the last few years. And it's just only a matter of time before the reality of what people are owed in silver versus what exists in silver kicks in. And when that happens, yes, I think we're going to see huge price spikes.
Yeah, yeah, absolutely. I think a lot of people don't realize when they see the silver spot price or the gold spot price, they don't realize that you can't actually go buy a physical ounce of gold or a physical ounce of silver for the spot price. And with these ETFs selling, many times over more shares than they actually have metal, in their holdings. If it's kind of like the game of musical chairs, right? If all of a sudden too many people start demanding their actual delivery of physical metal, those funds don't have enough to deliver. And in fact, they put clauses in there so they don't even have to deliver the physical metal to protect themselves. And so that's why I tell people, look, it's a yes, if you are going to go buy shares of silver and not actually receive any metal, you can get that a little bit cheaper because nothing is being delivered to you. And the other side of it is if a company, if I have 100 ounces of silver in my hand, and somebody wants to buy 200 ounces, if I'm dealing in physical metal, all I can sell them is that 100 ounces. A lot of these funds, sell 8, 10, 15 times the number of shares compared to the actual metal that they have. So in the real world, physical supply has been shrinking. We're down
Right.
over 760 million ounces since 2021. So 5 years ago, that's how much silver has left the stores, meaning stored physical silver. And that gap, that deficit, is continuing to grow by 46 million ounces this year. So we've got 6 straight years in a row where more silver is being bought than is actually being pulled out of the ground. And that's why they're expecting a pretty big silver spike here. We don't know, again, is that going to happen in the next couple months or maybe 6 months or a year? But it's very clear that we've had 6 years in a row of increased demand and reduced supply. That is going to cause prices to continue to go up.
Yep, you're right. And that's, again, it's going back to the original article. It's key for people to understand, and for those tuned in, please understand this difference is that when it talks about BRICS nations buying gold, they are buying physical gold. They are not buying, ETFs. They're not buying silver and gold contracts. They are buying the physical stuff. And the reason I really am kind of trying to nail that point home or drive that point home, Chris, is that, and I'm sure this happens to you. I can't even tell you how many friends or people I run into in social circles who are investors and pretty avid investors, several of them. And when you talk about gold and silver, because they know what I do for a living, and so
Mhm.
that topic always comes up. But I will tell you, in the vast majority of cases, when you start talking about their gold or silver holdings, it's typically an ETF. It's
Yeah,
typically, some kind of a contract or maybe a mining fund or share, something to that effect. And that's great. They can be good investments if you're looking to play the market. But understand, again, these BRICS nations are not trying to play the market. They're trying to put a stabilizer in their financial portfolio. So
right.
thank you for that, Chris. And for those of you tuned in, if you want to learn more about what you can do to put physical gold in your possession or in your investment portfolio, or perhaps your retirement portfolio, please feel free and contact us. You can call or text at 1-800-289-2646, or you can visit us online at www.swissamerica.com. You'll see both the phone number as well as the web address in our show description here. Thanks for tuned in. If you're not subscribed, please do so. And we'd love to talk to you more in the future. Have a great rest of your day, and we'll see you real soon.
Take care.